Hello everyone. Today we will be talking about the important part of ICT concepts, and that is the daily bias. It's very simple and easy to understand and helps you prevent entering losing trades because you didn't know where the market is going. So let's get right into it. So these are the 4 simple things you have to understand when looking for daily bias. You need to first identify recent liquidity sweep. And for those that don't know what liquidity is, it's basically the place where people have their stop losses and recent highs and lows. It's very simple. Just pretend that you have entered the trade here. You're long here, let's say. And think, where would you put your stop loss, right? So that's your liquidity. So you would maybe put your stop loss here, right? So let's just get that out of the way. So we can see that we took out this liquidity right here. This was our buy side liquidity. We also took out this liquidity before the sell side liquidity. So recent liquidity sweep. So we can see that we took the buy side. So now we're expecting to reach some opposing liquidity or some opposing inefficiency. We also failed to this place above. So that indicates that we want to go down. So from this moment, after this day right here, you would want to be bearish on this day. And even on these days, but we will get into it. Why? Maybe you shouldn't be. So identify recent liquidity sweep, check. Look for opposing liquidity. So what is the opposing liquidity? Again, it's the place where people have their stop losses. So this would be our new sell side liquidity, this low right here. And this is our buy side, but it's not the opposing, right? So let's keep it this here, or we can keep this here, but look at it. And what you want to also do is look for more liquidity, more places where the liquidity can be. So this is our closest liquidity right here, right? But we can also see that we have this low right here. This is also the sell side. And here we have this liquidity also, which is very close, right? So now our closest liquidity opposing to the side we already took is our target now. So that is right now this sell side right here. And you have to think about it like this. Like, you see, this looks like this should be your sell side, right? But you want to start your bias from this candle that broke the high. And then look for the second candle that might confirm it. Like this candle could have just went for this one. So then you would be looking for another candle to close in the direction you're looking for. And now, before just blindly going bearish or bullish, look for fair value gaps and order blocks. And why? Because it's the place where the price can just reverse without anything basically on the chart for the blind eye or a retail trader that doesn't understand these concepts. So we can see that we took this liquidity, right? Before. Let me show like this. Okay, so imagine we took out this liquidity, right? Then we were targeting this liquidity right here. It also happened. And to be more precise, where should you start being bullish when we took this liquidity? You want to look at the fair value gaps and order blocks. So we can see that we have a fair value gap here, which was already entered a couple times before. So we expect this one to fail. Then we have this fair value gap and this fair value gap, and also this little order block here, right? And we can see the price reaching for consecutive encouragement of this fair value gap, which is the 50%. You can take your fib, and you can see it is the 50%. 69.75, and this low is, I can't see numbers, but it's gonna be around that. So that will be your point of interest. And we can also go to the weekly chart and look for those fair value gaps or order blocks that are there. And right here, you can see first this fair value gap, which we felt with this move down. So you should not be bearish once we took this big weekly fair value gap, all right? And there is also this breaker. That's also important. So back to the daily chart. So you want to look for recent liquidity sweep. We took the liquidity here. Now we're targeting the low. Now we took this liquidity. You want to also look for fair value gaps and order blocks where the price could reverse. So fair value gaps here. This is the weekly fair value gap too. And look for premium and discount zones. And for those of you that don't understand this, it's very simple. Just take your fib and you can see the 50% of the fib and the below and above. If you're bullish, above this 50% is premium. Below is discount. And if you're bullish, you always want to enter on discount because it's more, it gets you more probability in the trade. So how and where should you put this fib? You want to look for places where the move started. So we can see this order block. It's also swing low. So put your fib there. And then you're looking for the highest point of the move before going down. So if this price behind, if you made this high, this new high here, you would put it here. And if you are bullish, you want to look for the price to retrace here and enter here. But we can see the price took the high and went higher and higher. And this is our highest point now. So we can see the price went into the discount zone. And this is not all. You should also look for something in the discount zone. It can be an order block or the fair value gap, right? So we can see this fair value gap right below the 50%. And it is the fair value gap that got support, that supported the price. We can also see that we got this high here. And you do not want to be bullish in the premium. You want to wait for discount, look for the fair value gap or order block, and enter on that one. Or that is your point of interest right now. So this video might have been a little chaotic. Let me just recap everything again. So first, look for liquidity sweep on the daily chart for the most recent one. So we swept this buy side here. Now you want to be bearish. But what are you targeting? Your first liquidity would be this low right here, which is also the start of a fair value gap. And that is also the liquidity. Because if you look at the lower time frame, imagine you entered long here. You're putting your stop loss here. That's your liquidity. So first liquidity and the second one is here. So right now we took this small liquidity on the 4-hour chart and you would like to be bullish now because we also took this fair value gap. Also premium and discount zone. We went into the discount zone entered on the fair value gap hold. So now we expect the price to go above this buy side here and take out this one. So very simple, guys. Think about it basically as intraday. This is almost the same thing you want to do on intraday too. So thank you guys for watching. If you like the video, please leave a like and subscribe, and see you in the next one.